What's up? I'm Dan Fredenberg, and this is another Chance Encounter. I'm joined today with, I'm going to have trouble with this because I'm going to make guesses on the Mandarin because I was thinking it was probably Chou LuPei or something like that, but I don't know which tones your Lu and the Pei are. It might even be a Bei in there, but how about you introduce yourself for the audience?
Hi, Dan. I'm LuPei Chou.
Mhm.
Chinese pronunciation, 周 LuPei.
Okay. Oh, right. Yeah. So I know yeah. Okay. Gotcha. I know the family name. That's all good. But that's not why you're here. You're here because I interview commercial real estate investors. This is a chance encounter. And the whole idea is the law basically requires, especially if you do a 506B raise, that you have what's called a prior substantive relationship. And so what we're doing is we're documenting our relationship for compliance. And I'm sharing it with my audience because maybe we have some synergy, maybe we don't, but at least I want to make sure that you and the audience know where she fits into this business here, and if she's a good fit for you. But do you have anything more as far as an introduction you want to share with the audience?
Oh, gosh, like, who are the audience?
Oh yeah, exactly. It's a great big audience. Look all the people. Holy smokes. All right, so let's go through the motivation piece then. So the motivation piece, I go through it first because sometimes we have some beginners on here, and they know why they want to get involved in commercial real estate, but maybe they won't know what they intend on doing or they're going to end up doing. So the first motivation I've found is to preserve purchasing power. So if you already have the cash flowing assets, that's how you make ends meet, then you're very often going to have to make more acquisitions because inflation will take away from the purchasing power of your cash flow, and that will ruin the party. That's not my motivation. My motivation is to trade time directly for wealth as opposed to salary or wages. I've got a background in the CRM industry. I had an agency dealing with CRM, so that's mass marketing and funnels and online sales and all that kind of fun stuff. But the problem with being a high wage earner is that you're also paying the largest amount of tax that's out there, which is income tax on salary or wages. So it hit me that I should really pivot to figure out, well, okay, well, how can I exchange my time and energy for equity instead? So that's my main priority. But the most frequent motivation that people choose is to fast track retirement, which really means gain more control over your own time. So maybe that means you want to work fewer months per year or fewer weeks per month or fewer hours per week. Or maybe it means that once you're an accredited investor, you're going to want to move to some place with a low cost of living and then live out your days that way. But regardless, you're trying to get out of the hustle more than anything else. That's the most frequently chosen one. But the next one, they're a bit different because they're so ambitious. They want to buy their entire hometown. They want to make sure that their great grandchildren never have to get a day job. So that level of ambition means they're going to keep on working into their 90s. And the next group will as well, but they've chosen maybe a sector of society, or maybe it's the environment, or maybe it's animals, or who knows what it is. But they realize that having the financial assets to make a difference is one of the biggest parts of actually making that difference. So that's the reason why they're making more acquisitions, is so that they've got some sort of cause they want to forward. So what of those five different motivations really jumped out to you?
actually two jumped out. So it's number two and number five.
Number two and number five. Okay, so time for wealth directly, and then help the people who need it. So did you have anybody specific or like groups or something that you want to mention in particular, or?
For me, as you know, I'm an immigrant, and I am right now I'm a naval officer.
Mhm.
So for me, investing, real estate, doing business is just really not something, I grew up with. It's not something, like I learned in school or in the military, but
Mhm.
it's so powerful, right?
Mhm.
And it really just opened my eyes to so many things. And I just want to be able to share that knowledge to really, like the hardworking Americans, just the honest, hardworking people. I think
Mhm.
they're just the most deserving. And
Mhm.
that's why the group I really want to connect with and empower.
Mhm, mhm. I love that. Yeah, that's really fantastic. It really is one of those things where, like, I've been saying that it feels like you either have to learn how to play the game or you're just going to lose it. And I just think, like, when it comes to taxation and how society, the economy is set up, it's you have to have at least one foot in real estate. But for you in the audience, maybe you're not that familiar with commercial real estate, so I made the Dan Does Deals commercial roll die, and you can get your own one at dandoesdeals.com. It's free. I don't even ask for your email address. That's a really bad idea. Okay, like, as a marketer, you're supposed to make sure that if you give them anything, you got to get their email address so you can pester them and stuff. But I didn't do that. Why? Because I want you to print them out. I want you to get used to the different terms in commercial real estate and make sure that you can communicate effectively. And then that way, I don't know, you can tell your parents, tell your friends, or barn animals or something. But let's talk about the 6 different roles. The first one is the repositioner role. So a repositioner looks at a bunch of different properties. They're an acquisition person. So they're talking directly to the sellers, the brokers of the sellers or whatever. And the repositioner first has to look at the numbers, and they have a fancy word for looking at the numbers. They call it underwriting. Okay, so they do the math. They find out, is this building actually making the amount that they say it is? Then they also are finding out, it's like, okay, well, how can we reposition it? In other words, what changes can we make so that there's more upside, so they can make more money from the property? And the two main tools in the repositioner's tool belt, I guess I could say 3 of them are tools for that upside. The first one is operations. It's finding more efficiencies, getting fewer Benjamins going down the toilet. But operations also includes bookkeeping. There's also a marketing component, which is one of my fortes. And that marketing component is to make sure that the vacancy rate stays low. So operations can end up bringing up that upside, but often right now that's not enough for a repositioner. And so they need to get the contractor team in there to make the place nicer. Okay, so you do the renovations, you do the value add, and that way you can charge more in rent, and that's upside, just straight out. But if the repositioner is from the internet, like me, then they got a problem. They're going to need boots on the ground. They're going to need a local. They're going to need somebody who can be there in an hour or two. And they have to be, it's a lot better than I will be, because I'd have to get my passport and a bunch of stuff. So that's not going to be me. But all of these people, if you're a tenant, you're probably going to say, oh, that's all the owners, isn't it? But it's not that simple. The banks, the financiers, the fund managers, they all get involved. And if you have all those pieces and you go to the financier, and like that's the other tool in the repositioner's tool belt, is if they have better financiers, they can basically do deals that other people won't be able to do. But the bigger thing is the financiers are going to have one burning question that hasn't been answered yet, and that is, who's the sponsor? Okay, and the way that that works is, if you want to be eligible for a loan, somebody in the fold has to already own a similar asset, or you will not be eligible for the loan. Your team will not be eligible for the loan. Also, you have to have a certain amount of liquidity, and then you also have to have a net worth combined of at least the amount of the loan or greater. But if you have all those different pieces, you've got yourself a commercial real estate deal. So, of those different core competencies, what are you most likely to contribute in your next deal?
Um, I think, well, so in reposition,
Mm-hmm.
not so like I don't think I'm really into the toilets and stuff, but I am very interested in the marketing piece
Mm-hmm. Mm-hmm.
and like connecting with people, and but that's not really reposition, right? That's more like
Right, right. That's the acquisition part of basically deal sourcing. So yeah, I still call that a repositioner, especially because like I'd say like we're kind of all repositioners in some ways, and then we also always have to be sourcing capital. So like you always have both of those things going to some degree, but yeah, so I'd say pretty much everybody is a repositioner because you're
uh,
if you especially if you're not doing direct to seller, if you're going through brokers, then for sure somebody else is going to be the one who actually finds the property, and you're just going to be coming along with your team to hop on and say it's like okay we'll run the place, or we'll end up shoring up the funding to make sure that this all happens. But it sounds like you're doing the repositioner part. Are there any other core competencies that jump out? You said marketing, so that'd be part of operations as well, right?
yeah, I think I would be a good like a local boots on the ground, except I am not in a good market right now. Like I live in
Mhm.
DC, so it's
Mhm.
like I don't know anybody want to come here and buy apartments. But I think that would be good, like skill sets wise. Yeah.
All right, awesome. So the next question I have is about the ideal property. So when commercial real estate investors talk to each other about an ideal property, I like to say that they're asking about three and a half things, really. LuPei already, excuse me, she already mentioned that she's in the DC area and people aren't interested in that. Well, that's part of the geography. Okay, so they want to know what states, what counties, what neighborhoods, okay? What is the perfect place for you? And the next thing they're going to want to know is the unit count, okay? This is all about commercial real estate, and industrial or warehousing will be measured in square footage, but everything else will have a unit count, okay? So unit count is what we're going to want to know. And then the last one is class. And unfortunately, there are two different definitions of the word class, two different usages of it, and they're both the same rating system. One of them is for the area that the property is in. So, like, how close is it to schools, like good schools? What's the crime rate in that area? And then the second use of the word class is the condition of the actual building. Is it beat up? Is it okie dokie? Is it fantastic? Like, are the toilets gold plated and stuff like that? And the way that they compare those is the same as in grade school. So you have like C, C plus, B, B plus, A minus, and so on. So as far as properties that are easier for you to say yes to and more difficult to say no to, go ahead.
Oh, BBB.
Okay, BBB, yeah.
I think yeah, somewhere there. Yeah, in that
Okay,
ballpark.
okay. So you're talking about B class properties in B class areas is the main thing, right?
Yeah, I think that's a good place to be.
Uh-huh, uh-huh. And then the unit counts that you were talking about.
I have only done so I have owned up to 18 units with
Mhm,
partners, joint venture. I
mhm,
have invested as limited partners in the bigger deals. So I really can't speak for like bigger property, a bigger size, because I don't
mhm,
have experience. So I'm comfortable with like, I would say just for me, myself doing it, 20, 30 units.
mhm.
With the team, then of course that just depends on what the team brings to the table. Yeah.
Right, right, right. Okay, cool. And then one of my favorite things about commercial real estate is how, because it's multifaceted, you got all these different people doing very different things. we're all very helpful because we don't tend to be in direct competition. There's a very small chance that we're going to be working against each other, and we're always trying to create these teams to take down these deals. So, but there's one thing about that, which is we all have our unique abilities and strengths. So there's always going to be somebody on the die who's better suited for you to help than other people. Now, me with my marketing and digital background, the sponsors and KPs are the ones that I'm best suited to help because they'll already have some systems in place and they'll know that whatever that is not going to work. And then that way I can actually be more meaningful with my skill sets to build that relationship a whole lot better. But how about you? Without breaking any SEC restrictions, so no enticing investors, but who are you best suited to help? Is it beginners? Is it intermediate, like the operators, contractors? Who is it?
I would say for me, okay, so what are options? My options are operators, contractors.
So yeah, well, it's just like who. Okay, well then who do you hope will reach out to you? Is it more financiers like fund managers, or is it more locals, more operations people, more repositioners so you can get more deal flow or sponsors? What do you think?
Sponsor. I really only had, I think I would say, experience with sponsor. I have done like operations and
Hmm.
contractors on my own projects, but they're small. They just not commercial level. So
Hmm.
I think
Hmm.
that's not. I don't count that.
Okay, all right. So that's who to reach out to you. And we met through some meetups. I found the meetups through LinkedIn. That's where I spend most of my time. Is LinkedIn the best way to reach you, or is there a website that's better or something, or how should people reach
Oh
out?
yeah, LinkedIn is good. I have a website, Sisterhood in Real Estate. That's my website name. So if you Google Sisterhood in Real Estate, you'll find that. Yeah.
All right, awesome. And there's only one other thing, which actually isn't for you. It's actually for you in the audience, which is if you look under my left hand, if you're on your phone, you'll see it all in this like awful red writing. It says subscribe. But if you're on a desktop, it's this big, ugly red button. It's like ooh, okay. And the only way to get that awful red button out of your life is you just click on it, and then it turns gray and it has a magical power. What magical power, you ask? Well, it means that YouTube pays for these videos instead of me. And does that sound awesome or what? And it doesn't cost you anything. What it actually does is it just means that my videos might show up on your list of suggestions, but you don't even have to watch those. You've done me an enormous favor already, especially if you hit that subscribe button. But that's just like LuPei. You've done me an enormous favor by joining me today. This has been great getting to know you better.
Thank you. Likewise.
Awesome. Thanks. Hey, I'm Dan Fredenberg, and if you are trying to get people to invest in your business, there's a good chance you're breaking the law. I have 506B to make sure that you're in compliance with 506B requirements. Most importantly is that you have a prior substantive relationship. How do you prove you have a prior substantive relationship? I know that a CRM isn't going to work, so what I did is I set up a system for me and my friends where I have these videos where we establish, for commercial real estate investment at least, what our core competencies are, what our motivations are, our appetite for risk, and all those sorts of important questions, so you'll be able to figure out our levels of sophistication. And then that way, I think that that's as good as you're going to get, and it's easy to document. So even if a judge completely hates your guts, I think they'll still be able to accept that they knew you and you knew them, so it wasn't a public solicitation. You don't always have time to give people your appetite for risk, your level of sophistication and whatnot. Who knows? It's probably a busy conference where they're busy trying to sell you some crap instead. So what do? You make sure you have your 506B code, you've got that bookmarked, your own profile page. then if somebody opens up the QR code scanner that's in their phone already, they can scan it just like this, and then that adds it, when they open it in their browser, it adds that to their 506B watch list. So when they get back to the hotel room or back home, they can binge watch through everybody's profile videos so that they know who they met. So 506B me after this. Thanks. Bye.